Hey everybody, Mike Vacchi, PrincetonTrader.com here with your closing recap. It's about 4:40. A little bit of an interesting day in the markets today. What you've got here is a 5-minute chart, and the first thing I want to point out is 1867. Even before the Fed, we'll talk about the Fed in a minute, but you've got 1867. 1867, 1860, the pre-Fed number was right up there, brushed right up against it, and then it just got sold. Sold, came up a little bit, and then we got into press conference territory, and this is where it gets interesting as we get into the Q&A, and whatever the chair meant by those comments, I think was taken out of context. I think it's a little bit of an overreaction. I think that ultimately the people that sold so hard down to 1842, one of the things we follow in the room are the ticks. And let me show you a tick chart. Okay, this is the New York Stock Exchange tick chart. It's one of the many indicators that we follow in the room, but this is the one that we follow in the room when things get extreme. It's the indicator for me that best tracks when the market really gets either too exuberant or way too bearish. It's the freak out meter, okay? I don't really care about any tick that happens in between the thousands. So any positive tick that's less than positive 1,000, any negative tick that's higher than negative 1,000, I don't care. I really don't care. And if it's just one tick below negative 1,000, that doesn't even hit my radar. I care less. It doesn't mean anything. Honestly, it doesn't. But when you start getting ticks consistently below 1,200, 1,300, 1,400, 1,623 was the low tick today at 308. That is indicative of the market getting very carried away in one direction. And that is an indicator when it gets to levels like that I will almost always fade. And that's what we did today. So you saw this huge sell reaction on the answers that the chair was giving at the press conference. And undoubtedly, whether or not the correct direction of the market is lower over time is one thing. Okay, but most of us here are traders, and when you see ticks like that, that is a serious fade. And so we faded that stuff in the room, and we ended up having a very good, we had a really good trade off of it. But I just want to show you guys historically what we're talking about with a tick like that. Okay, first of all, don't freak out. Okay, this thing is not broken. All right, this is a daily tick chart for the last 3 years. Goes back into 2011. And what this purple line represents is negative 1,600. And you see today, that's today, okay? We haven't seen a tick that low since November the 17th, 2011. And the lowest one that we've seen, we're getting back into 2011 here, where we saw anything this low. So it's been about, 2 years, 2.5 years. So when you see levels that extreme, you as a trader have to take notice and you have to get involved. And so you get that, that 8-10 handle fade. Now, how these moments bear into overall price action is pretty mixed. Sometimes they mark lows. Sometimes you'll see a continuation of the lows down. So what you need to do is understand in the moment that these kind of tick trades are good for a trade. And that's what it was today. Whether or not the 42 area is a low, we're going to have to see. What the bulls need to do now is they have to establish a higher low somewhere in this area between 42, and you can see that maybe 50 is going to try. I kind of like the 48 area potentially as an area for a higher low. But I've said this before in other webcasts. When you see extreme candles like that down at the 42, although it did happen in the regular trading session, those tend to get tested. So I would not be surprised if we went down and we came pretty close to testing that 42 area, because the market has to know whether or not that area is the real deal. Okay, and then from the bulls' perspective, it's their job to get back up over the middle band on the continuation chart in order to go ahead and try to make new highs. If you continue to see, as you've seen right here, where's the middle band on the continuation chart? Middle band on the continuation chart is 1856.08. Where we stall out, 1856.75. So as we sit here right now, the continuation chart, middle band, was resistance on this rally off the 42s. So there's takeaways from both sides. That was quite a sell-off today, and it was a sell-off that needed to be faded based upon the ticks. However, as you look longer term, you have to respect the fact that this middle band on the daily chart here is coming up as resistance. So it should be a very interesting night. I'll be out with the market webcast in the morning. But anyway, just wanted to touch base, a couple things to look at as we close up here and get ready for another session. Have a fantastic evening, and I'll talk to everybody in the morning. Trade them well.